As we head into the most bizarrely momentous earnings season in living memory, there's a tremendous amount of uncertainty in the economy, so we can't expect much in terms of guidance. But you know what? The market's come down so much in the past 3 months that maybe you don't necessarily need a forecast to send your stock higher. Witness Levi Strauss & Company, the iconic jeans company that reported last week. Here's a stock that had tumbled from $20 in mid-February down to $9 in its lows last month, which made sense when you consider that nearly all the stores carrying their merchandise have had to shut down. And there's not a ton of demand for pants when hundreds of millions of people are in quarantine. But last week, Levi's reported a solid first quarter and the stock caught fire. The company delivered a healthy top and bottom line beat, and more importantly, management reassured us that they've got enough liquidity to make it through this difficult period. So even though the company withdrew its full-year forecast, suspended its buyback, the stock was able to soar, get this, 45% last week. In fact, after a small gain today, it's now up more than 50% from its lows. Can this thing keep climbing? Let's take a closer look with Chip Bergh. He's the president and CEO of Levi Strauss & Company to get a better sense of how his company is handling this difficult environment. Mr. Bergh, welcome back to Mad Money.
Jim, it's great to see you. Great to be here. Thank you for having me.
Well, Chip, here's my thing. I'll postulate something. There are two kinds of companies in a time of crisis. There's the companies that just started, and we wish them the best of luck. And then there are companies with iconic brands that are 167 years old that banks are willing to lend to because they know they're going to be here. Does it matter, the word iconic?
Absolutely. I fundamentally believe that through this crisis, strong brands are going to emerge from this stronger than ever. I like to say that crisis creates an opportunity. And as you said, we had a really strong first quarter. We carry a lot of momentum with us coming into this crisis, and we're going to use the crisis to come out stronger. We've got a lot going for us. We've got a super icon, one of the most iconic brands, not just in apparel, in any industry. The Levi's brand, defines denim. We've got a strong balance sheet. We've got $1.8 billion of liquidity, about $900 million of cash as of the end of our first financial quarter. We've got an experienced executive team. I've been in place for 8.5 years. Harmeet, my CFO, has been around for 7 years. And we've taken out costs before. We had to do it when we first got here, and we took out a couple $100 million. And we're going to have to do it again. But we're very, very financially disciplined, and we go get what we need to go get.
Well, we'll do that again. You have to do it again, even though you had a good quarter. You still feel like you have to do it again?
I think fundamentally we're going to use this as an opportunity to right-size the organization and to make ourselves stronger. We're going to focus on coming out of this stronger than ever. And we're continuing to connect with consumers. I mean, that's super important during this period of time. Right as the festival season was about to happen, Coachella was supposed to be this past weekend. We've brought music festivals to consumers' homes. We're doing the Levi's 501 concert series every weekday at 5:01 p.m. We're live streaming a concert from our Instagram Live account and connecting with hundreds of thousands of consumers that way every single day. So we're doubling down on things that are working. And like you said, there aren't that many companies that have been around for 167 years. And during that period of time, we've seen it all. Civil War, 2 world wars, the Great Depression. We've been through all of them, and I've always managed to come out stronger on the other side, and we're going to do it again this time.
Chip, I have to tell you that when I think direct-to-consumer, the company I felt that was most successful at it was Nike. I was shocked at the huge percentage of your sales that are direct-to-consumer.
Yeah, when we report direct-to-consumer, it's just our owned and operated stores and our own owned and operated e-commerce business, and today it's over 40% of our total revenues. Most of our stores are still run by franchise partners, and that rolls up into our wholesale revenue. So our retail base is a big, growing, important part of our business. It's strategic for us. It's the third plank in our where-to-play strategies to become a leading world-class omni-channel retailer. Our DTC business was less than 30% 5 years ago. It's more than 40% now. Wholesale is a percentage of our total business. U.S. wholesale is a percentage of our total business. Is down pretty dramatically as well over that period of time. When I first joined the company 8.5 years ago, U.S. wholesale was almost 50% of the total company's business. Today, it's less than 30%. And it's not because it hasn't been growing. It's been sort of flattish for the last couple of years. It's because the other channels and our international markets are growing much, much faster. And that's been strategic. That was the choice that we made to diversify this company.
Let's talk about the international, because one of the themes of tonight's show is what's going to look like when things reopen. You had a store in Wuhan. How's that going?
Not only a store, our biggest store in China, which we had just opened in early October. And in fact, I was in Wuhan the third week of October with some of my team to not only see the store and meet the team, but do a market visit. And that store was closed for 10 weeks. We reopened it on Monday of last week, a very big moment. But we have about 500 stores, including our franchise partner stores in China. And all but one of them now have reopened. So we're back in business. We're trying to learn a lot from how to come back to business, what happens with traffic, how do we manage hours, how do we manage store expenses, how do we get the consumer back? And we're learning a lot through that will inform how we go forward as some of the Western markets begin to reopen here, hopefully real soon.
All right, and in true Chip Bergh form, Levi's launched a $3 million philanthropic fund to support employees, community partners, and supply chain workers. So you've been able to try. I know you had to, if you have the right size, you can't keep everybody, but the $3 million is going to help?
The $3 million is definitely going to help. In fact, included in that $3 million is a grant to our Red Tab Foundation, which was the first employee-funded foundation designed to help other employees and retirees who hit some kind of a important financial need. So it is historically totally driven by employee funding. It's well funded right now, but recognizing we had to furlough almost all of our U.S. Retail store staff this week. And, it's going to create a financial hardship for a number of people. So we made a company contribution to the Red Tab Foundation, knowing that there's going to be a need for additional support for our employees as we go through this challenging period. But hopefully our stores will reopen again soon and we'll be able to bring those furloughed employees back real soon.
All right. Terrific. Chip Bergh, thank you. Congratulations on a great quarter. When a lot of people didn't understand the iconic brand and what it means. Always good to see you, sir.
Good to see you too, Jim. Thanks for having me.
That's Chip Bergh, CEO of Levi Strauss. It was a real good quarter. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.